traders, thanks for watching. I'm going to do a series of videos on stock market and option chart indicators that can also be applied to trading cryptocurrencies. I was doing a series of videos on how to buy this cryptocurrency called DHO, it stands for Diamond Hands, and as I was doing it, it kind of occurred to me as I was looking and explaining some of the charts that I felt like I had a lot to share on chart indicators and how I use them to day trade and swing trade on options. So that's what this video is mostly about. I do have a website called blockstocks.com. If you click on this menu bar, scroll down to the bottom, hit stock market analysis. I've got this page here that has lots of different tools, goes all the way down here in the bottom. And so this is a free site here, stockcharts.com. They have really great information, lots of education on different charts as well as cryptos. This one here, simplertrading.com, I use a lot of indicators from them. I also enjoy a lot of the training that they do for options, and they actually also sell like a package, I guess, that includes real-time option alerts from experienced traders, indicators, and of course training all in one package. If you're interested in options, that's the way to go, is this kind of training here. So if you click on this link, you're just going to be offered a discount on the options package. So you can check it out. If you think that might be helpful to you, then go ahead and check it out. But let's get into the MACD indicator. So I've got this is Thinkorswim, and I've got a few different indicators here, and I do need to explain what these indicators are, and to some degree, in order to explain what the MACD, how the MACD is useful. First of all, MACD stands for Moving Average Convergence Divergence, and understandably, we've got two moving averages laid across one another. We have a short-term one. In this instance, it's the blue line, so it's reacting quicker to the price action, and then we have a longer-term moving average here, which is it's got a smoother kind of line because it's reacting to a longer period of price candles, what you have here below it is a histogram, what they call it a MACD histogram, and what these bars represent basically is the area between the two moving averages. So it's just another way to visualize the space between, which is oftentimes helpful to see where something is starting to change. So for example, when this thing here tops out and changes direction, that's kind of an alert to say, hey, we're probably going to not see as much upward momentum in the stock at this point. It does go up a little bit more, but then that's it. It ran out of steam right there, and it turns over, and then you get this downward cross across the longer term moving average, indicating some kind of reversal or consolidation in this case. Now, some people believe that the words convergence and divergence represent the separation of the lines. So for example, let me just scroll over, let me just scroll here just as an example. So when this shorter term one line diverges from the longer term, the lines separate. And by definition, something that separates diverges. So in the literal sense, that is true, I suppose, that divergence represents the separation of these two moving average, and then convergence would be when they get closer together, like in this instance here. But the reality is that how most advanced traders understand it is that divergence represents when the MACD does something different than what the price action's doing. Okay, and I'm going to explain that in just a moment. First, I want to explain that the MACD is what they call a lagging indicator. And what that means is it does not predict price movement, it responds to what the price is doing. So if the price bottoms out here, it doesn't necessarily respond until the next candle. So I'm going to show you that here. So you see this price action kind of bottom out in this candle right here, but the moving average didn't bottom out till there. So it's kind of responding to previous or past events. So because of that, because it's lagging the actual action of the stock chart candle, whether that's stocks or cryptos, you can't trade alone off the MACD. And oftentimes there are fake outs or false moves. So for example, this thing you're tracking, and then, oh, it's about to go up, I should buy and get an entry. Well, no, it actually kept going down. So it's kind of like you can't trade that alone. You have to look at everything else. Now that we know that you can't really predict based on the lines, what I like to do is I like to look at the slope of the line to see when it starts to become less of a slope. So for example, here it's going up, and then it starts to kind of turn over right there. So when you see that start to turn over, that's not an indication of what the price is going to do. It could certainly just keep going back up, but it's more of an alert. It alerts me to the fact that something might be changing soon. Another thing I like to use it for is direction. And but before I get into that, because that's going to be kind of the juicy part of how to use the MACD, let me just explain what divergence and convergence really mean to advanced traders. So divergence means that the MACD is doing something different than what the price is doing. So here is a really good example of that. If you look at the MACD in this section from here to here, the MACD is going down. But if you look at what the price action is doing from that instance, it's actually trading sideways. It does go down a little bit there, but it actually ends up about the same price of where that was. So the MACD, if you traded that alone, you would expect that the price from here, from this moment in time, and it says it's 422, you would expect that the price would be lower here by 522 a month later. But the reality is that the price has actually ended up to be the same level. So it traded sideways, not down. So that is an example of what divergence is. The MACD did something different than what the price chart did. And so it's more of an alert that something's happening than to trade it alone. And then therefore convergence is when the MACD is doing the same thing as the price action. So if the MACD looks like it's going up, then if the price is going up, then that's a convergence of the moving average indicator. So let me get to the last part, which is how I use the MACD to trade. So this particular chart, just so you know, is a daily chart of the SPY, and I recorded this video on July 4th, 2021. And I'm going back here to April just to illustrate. These other indicators that I use, this one is called the Squeeze Pro, and it is an indicator I had to purchase from Simpler Trading. But let me show you the power of this indicator. These dots indicate consolidation and what he calls a squeeze. Now this is not the same as a short squeeze. Let me just explain the difference. A short squeeze is when someone takes a short position and their intent is to make money on the way down and buy to cover their position here. So they're selling high and buying low and then pocketing the difference there. Okay, so what a short squeeze is when the stock starts to go up or against their own trade. So they sold here and they make money on the way down. But if the stock starts to go up above their entry here, then they're losing money here. And so what happens is you get short positions trying to buy to close, or what they call buy to cover, their short position. And so that represents buying pressure. Now that buying pressure, in addition to existing just regular buyers, it doubles the buying pressure. And so you kind of get this sort of like explosive movement called a short squeeze. And so people who can recognize that that's happening can take advantage and get a buy into a position maybe here, and then this thing, boom, goes up exponentially there. And then if they start to see that top out, then they can sell to close their position here and pocket this difference. So that's what a short squeeze is. But this indicator is not that. This indicator is representing areas of consolidation where there's kind of like a tug of war between buyers and sellers. People are trying to sell, but people are also willing to buy at those levels. And then what happens is you kind of run out of people who are selling, and then you get this sort of explosive movement of like dip buyers plus regular buyers, and boom, right here you see that black dot, and then all of a sudden what they call fires, it turns into a regular green dot. And this green dot here in the chart just indicates that the squeeze is going to fire soon. And so if you saw this green dot on the chart, you would better get an entry into this chart so that it's going to have an explosive movement either up or down. Now, how do you determine if that's going to go up or down? Well, one way to do it is to go to a higher time frame. So you can go at a week and kind of see, what direction it's going. If it's going above the mean of the Bollinger Band, then most likely it's going to go up. But if the price is crossing down the average of the Bollinger Band, then most likely it's going down. Another way to do it is if the price hits the bottom of the Bollinger Band, it's most likely going to snap back up. And by the same token, if the price hits the top of a Bollinger Band like here, it's going to want to snap down. Now, a different way to do it with the MACD, if you go back here to the daily chart, is you can look at this histogram. Or so for example, I'm going to actually change this to just to get more information. So let's say I have this squeeze about to fire. I don't know if it wants to fire up or if it wants to fire down. I don't know if the price wants to go up or down. But I do see this happening, so I know I have an opportunity to take advantage of an explosive movement. Well, one way I like to do it is I like to look at the MACD. So I can already see that we've got this sort of increasing momentum or divergence of these two lines. But it's a convergence of what the price action is doing. So when I look at that, I see that's like opening up, that I feel pretty confident that that's going to want to open up positive, like up. So I could buy a position here, a long position, in stocks or all that. What I would do is I would, I could look at the options chain, and now that was in the past, but I would just look at the options chain, and there's like a whole nother skill set on how to choose what option. That'll have to be another video. So I like to use it for the slope of the moving average to see when it's starting to slow down and start to reverse. Then I look at the cross as a confirmation on direction, and then when I see a squeeze forming, I'll look at the MACD histogram to give me an idea of if this thing's going to want to go up or down, so that I know if I want to buy a call or take a bullish position with spreads, or take a bearish position with spreads or options. Hey, I hope you enjoyed this video. I'm going to do other videos on how I use other indicators, whether that be the Bollinger Bands, these early in, early out indicators, the Squeeze Pro. I also use some other indicators as well, which I did not show in this chart. Thanks for watching, and visit me at blockstocks.com.